In a landmark deal for the healthcare space, Biocon Biologics, Biocon's biosimilar arm, is buying the biosimilar business of global pharma company Viatris for over $3 billion or over 25,000 crores. Remember, Viatris is the company which was formed after Mylan merged with Upjohn, a division of Pfizer. Remember, Biocon has had a partnership with Mylan for 11 biosimilars already. The deal will give further access to Viatris' biosimilar business globally. Kiran Mazumdar will be the executive chairperson of this entity. The deal will be funded by a combination of cash and stock, through which Biocon will be paying $2 billion of upfront cash. Viatris will be paying $1 billion for 12.9% stake via compulsory convertible preference shares. Biocon will be funding the deal via $800 million of equity infusion, which will include participation from Biocon, and the company will also take on $1.2 billion of debt to fund the deal. The deal will put Biocon as well as India on the map for a company which has an integrated biosimilar business. One of the points of the deal is that it will allow Biocon to recognize full revenue and profit from current partnered products and access to the commercial infrastructure that supports them as well. Sales are expected to exceed $1 billion in the next year versus around $875 million in the current year. The deal also gives an option to Biocon to buy a biosimilar which is for macular degeneration, Aflibercept, for $175 million, which Viatris has exclusivity on and will see fruition by FY25. The street, it seems, is concerned about a few factors. First is valuations. The deal is valued at around 16.7 times EV to EBITDA versus 6 to 7 times for Viatris on a CY22 basis. Second is debt. The company will be taking on $1.2 billion of debt on account of the deal, which will result in a total debt rising to $1.5 billion on Biocon Biologics' books, though the company has indicated that the EBITDA base will aid in debt management. Lastly, higher costs, execution risks. Higher costs, as Biocon will be taking on higher upfront costs, though the company has said that they will maintain EBITDA levels. And execution risks. For example, Biocon's biosimilar bevacizumab has been delayed due to a delay in US inspections. Insulin aspart has a complete response letter from the US FDA, and not to mention a rising competitive scenario overall in the biosimilar market.